Good morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How's your week?
Really, really good. Just kind of hitting some things off some levels. I mostly, I think, 80% of my trades were MSTR last week. Just almost every day off the pivots, and then big win on Lulu on the puts there. Didn't really see much upside, so I went 2-1 on the puts and calls, and worked out nicely. It opened for me.
Nice. Yeah, that short week always is never good for me. I think it was um, just on the way I do things. It feels like it's harder. The shorter it is, it makes it a little harder for me. And I had an internet upgrade in my neighborhood, so I was losing internet. I think it was Wednesday. I was losing internet like every 40 minutes. It would go out for 20 minutes. So I was trading on my phone. Hell of a week in that regard. Starting off with a short, having to adjust kind of what I do. But still, I know where we are. We're in that pop and fade market, and the second read on open, real good. The Fubo, grabbing some off of that level. The Victoria's Secret play we talked about last week kind of panned out perfectly. Shitty Chinese, that A plus Baidu setup we found in the Shitty Chinese kind of panned out for me. So I'm still, I don't know. I think it's because I'm not being greedy. This is still kind of just getting base hits for me pretty easy. But
Yeah.
this is the way it's worked. Just looking for that certain setup and giving it a little time. It's just been, man, the last month and a half. It's just made it a little bit easier to trade. Um, Talked a little bit with secondary about like the goal aspect of it. Yeah, some weeks you're getting, or some days you're getting 200 or 300 bucks, or maybe five, and then you get a couple grand one day. So you just kind of
Yeah.
play the law of averages on there. And if you need it now, you can make some bad decisions. And if you're just going with the flow, so to speak, you're probably still doing really well in this market.
Yeah, I think I messaged you on Friday morning before open. I was like, so what do you trade when you click a button and make 3 grand at open? And it's like not much. You just sort of just enjoy the day, start your weekend kind of deal.
Have a tea time.
Yeah, right, exactly. Yeah, yeah.
Oh no. Um,
Um,
let's just start there. What's kind of interesting to me early in the week, and I mean I've seen it before, so um, I'm kind of I don't want to say biased, but I have a bias when I do see it, or I kind of always have a, if this comes, this is what I think about it. And
yeah,
I think you dropped like 30, said you had 50, and I went in there
yeah,
thinking let's just be as cynical as we can on these 30,
mm,
and I still came out with like 11 that met
yeah, yeah.
the approval. Maybe 5 or 6 for my style, 11 for the room. Um, Rotation that kind of I anticipated to be what I call free money flow, where they know we're not going to go anywhere um, for maybe a month or a quarter. I don't know. That's more on your side on the actual dates of it. Um, but it wasn't. So I'm just kind of how you looked at that when that all popped up on your. I mean, was that like a round two fight for you, or was that like okay, I got some data I need to decipher?
So yeah, I mean, it was to me, it's an attempt to stir up some open interest, like so that there's I call that OI wake up, where you have stocks that have moved to a point where positions for January that were dead now all of a sudden are within reach, and so they start to pile into to shorter expirations to give things a little jolt. Um, you know, Maybe it's to get out of those positions. Sometimes it's to kick the can down the road. I've seen that over and over, where the OI wake up is not even to get back to their entry; it's just to make the contract relevant enough to where they can punt it to next year. And so that's kind of what I see. I mean, to me, it when you pair it with some of the Mag Seven getting a little bit stagnant, maybe that that rotation into some of those mid caps or B plus names, or JVs, semiconductors, or whatever makes it. It makes some sense um, for that to occur. So that's kind of how I see it. I don't necessarily see it as a go signal on all these names. I just
Yeah.
see it as hey, look, we're cashing out September options. We're gonna roll it somewhere, and so might as well try to stir it up for January. And some of those will hit and some won't. And I think we narrow it down based on our process and find the best ones.
Yeah, that cashing
So
out.
well, yeah.
Go ahead.
If I post 30, I'm looking for 10 to hit. Back to the
Oh,
baseball
sure.
analogy. We'll go 1 for 3, and then work through our process.
Yeah, and just double down on PSA for the people in the room. That's our workspace. We try to
Yeah,
get the emojis in there for the ones that are a little more actionable, but I mean that's just so we don't hide. Used to be our DMs, is what we called them, because we would do this stuff just in Messenger basically. So yeah, take that for what it's worth. I like what lines are not like, but I noticed what lines up there with. We both kind of agree with cashing out here. I mean, that's a statement
yeah.
I'm going to say, and you're going to say it. I don't think. I think you're a little earlier than I'm going to say it on the share side, but that's what I anticipate when we get the rate cut. I don't think was it CPI or PPI next week, whichever one it is. I don't think that really moves the needle. PPI, um,
Yeah.
but I do think that the oh, and CPI. Sorry, we get them both. I do think the the rate cuts will, and um, it's just interesting that it seems like you're in setting up for that, which is just I mean, if we've already talked about it, kind of not being a sustainable pullback, but a pretty decent pullback, and then higher low off we go. Does that kind of seem like what you're seeing over there? Because that's what I'm seeing over here.
Yeah, it's so the next step after what I'm finding here is what I call like the flow reset, where they kind of just start fresh, position into what they're thinking for the spring. And that, you know, basically, means that these option setups are going to play out. That open interest wake up is kind of, you know, make or break. I can see them bail on it if they start selling to close that stuff, and then we go from there. So yeah, so to me the rate cut is going to recalibrate the market a bit, and then I do think that it'll set up from a a pullback of some type. And when I see where AVGO is kind of the one I historically read, or Nvidia, which has been easier for me to read of over the past year. Um, yeah, I mean, I don't know if it's like 15%, or it's going to be something that feels catastrophic, that feels like the Bears are, it's going our way now, and then it just sets up at a higher low, and we go from there. So that's what makes the market hard to short to me, is that you're to be, if you're going to say like, oh, I wasn't wrong, I was just early.
Yeah. Yes.
That's much worse on the if you're a bear, because the move up just just grinds you to pieces, and where you're being right, you're not even going to get back to where you originally went bearish. You're not going to get back to that spot. So that's pretty tough. I think being early for the upside, you have the frying pan bottom and all these different setups, or you can DCA and then go mid candle and recover.
Mm-hmm.
It's still not the best situation to be early like that, but it's much better if you're trading the upside to be early than it is if you're a bear, in my opinion.
Yeah, I can give you those Nvidia downside numbers. I think we're on the same page there. Because
Yeah,
the word's perfect. It's gonna feel catastrophic. Kind of said that about the 635 on SPY a few weeks ago. Like when we pull back to there,
yeah,
it's gonna feel like we're dying. Um, and I know I fully anticipate that with Nvidia and other stocks. And I always try to keep my mind in a simple spot with that. And it's not like positive or negative. It doesn't have to be positive or negative thing. It just has to be a why. And for me,
Yeah.
it's not a pullback isn't going to be negative. To be honest, I think it's kind of positive. But if we get rate cuts and people see other avenues to use their money to create more money, buy a different asset, let's say real estate or pay off a loan, they're going to take money out of the market. And I think that's what we're going to see is that rotation from not retail, but some bigger fish repositioning when they do see some relief in the rates. And I don't think that's bad. I really don't think that's bad. Um, will it be an opportunity for the Mag 7 or the larger ones? That I'm unsure of. But I think there's plenty left in sectors. I'll just put it that way.
Yes, and there's going to be some things that um, during a broader market pullback start to do really well, and it's why I don't know. Like some people might wonder, like why even bother with oil, right? I mean, why given the market we're in, it's not really moving that much, or whatever. But the preparation is there, the setups are there for oil to make a significant move to the upside. You have to be patient with it. You don't make money day trading oxy weeklies, right?
For sure,
But
sure.
you set it up around levels, and all of a sudden, Dino is pushing $60 or Devin 55 or whatever, and we've done this over and over again, and the times that I've made money off of oil or materials, or all of a sudden you'll see me in Brazilian stocks or something, that the broader market is not having a great time when I've made the most money in those. So and consumer defensive too, and banks, and I mean, so we've done that, we've done this, and I think that the pullback here is not going to be as uh, as quick as, what was it, April. It's
Yeah,
not going to be as sustained as the post COVID thing, or or anything like that. But you're gonna revisit some levels, and there's going to be some new spot where I trade Snow from again. I think as Snow thinks about going to 300, um, it probably is going to go back and maybe revisit 200 or whatever, and you're just ready for that, and you're also, you can see past it. You have to see past the pullback.
yes.
The easiest way for me to see past the pullback is to read option flow. Um, if these whales with multi billions of dollars are looking past this pullback, um, why would I just assume that they're wrong about that? It does it doesn't work. Whales are wrong sometimes, but you do. I do like the, for follow the money. I just don't think you can't trade like a whale does, but you read the landscape and you find your spots, and that's why I check with you, and that's where we go. So yeah, I'm with you. I have the same feeling on the pullback and the outlook on what it means in the bigger picture.
I got a little bit to unpack, but I want to drive this to a question. The How do I put that? What the whales not being wrong, or the bells always being right? It's insurance for them. You got to see it that way. So they kind of want to be wrong in some regards,
Yeah,
unless you
yeah.
identify the accumulation level, or the accumulation trade through options, which you're very good at dissecting that kind of stuff. I always just use it as a check, or I mean, I could put it this week. Like I would have bought Marvel, wouldn't have bought Root off my my list. It's probably going to be the other way because of flow. I mean, just that simple. Um, it's more using. I would never try to just blindly follow them. Especially from the share side, it's probably even more dangerous from your side because you guys don't have the capital to pivot as much. So
Well,
definitely perfect your own style. Go ahead.
yeah, well, so yeah, when I post those, like the actual, they're algorithmic alerts, right? They have just
Yeah.
a, which they de-emphasize these days, because I think they don't work very well. Because it's they're late by the time they catch that. and I'll post it like, it's a stock I talked about last week or 3 days ago, and the best part of the move is done, and that algorithmic trigger is the attempt at a follow through or
The aftermath.
or something. Yes, aftermath, and it's just you're buying. I say sell into a strong green candle. Well, if you follow that alert, you're buying into a strong green candle. Which for me, when I use the phrase quick hitter, that is what I'm doing. But I'm looking to exit that in the next 5 minutes or something. I mean, because it's just it's a sustained move, pop and fade, or follow through after ER, or something like that. It's a scalp, like it's just that's all it is. But I think people who have alerts like that, they set and forget. Even if it's a weekly, they set and forget, and you cannot do that with those. You want to read option flow, you have to dig into some of the raw data on it and figure out how to filter it and how you want to read it.
It kind of full circled us to that question I had, or thought I had was the April pullback. I mean, again, if we were content creators, I probably would have posted it 57 times by now, but I screamed in one of the voice sessions, the bottom is in. Like I was
Yeah.
pretty adamant about it, and normally, like, I don't, I don't try to call shots. I really don't. Um, but it just you could see that through the volume that there was just nobody selling, and anytime you did get a 5%, just the buyers would just pile in, and it just felt so fake for
Yeah.
me.
I
And
Right. Yeah.
do you, just to get the question out, do you,
Yeah.
you said that we won't be that fast this time. um I don't think we'll be that deep either,
Right.
but do you,
No, I'm with you.
it kind of elaborate on the fast part. What do you mean by that? Like it won't be 2 weeks and then we kind of level
Well, all
off?
right.
Do you see
So,
more of a drain out?
uh, yes, a little bit of a slow bleed, and sort of like the buy the dip attempts will not work as well. It's like you basically like we'll kind of keep falling, but let me just go back to this real quick. So we look at that like Nvidia, falling from that 120 to 95 from like March 26th to April 7th. I don't think you'll get a move that down that's that severe, like fat candles like that. But I think instead you bleed out a little, you bleed out over. It won't be as much, So you basically just it's not gonna instead of you where you have your pre-market drop and then V-shaped recovery, almost every day. That you sustain the pre-market drop and you bleed out a little more, and that just will happen over the course of like I don't know 3 weeks or a month, and then you start to settle from there. I don't know that we're going to get some big jolt down and then instant recovery. That's not really how I see it right now. But yeah, so that's kind of my thing. More just a trend day down is completely rare, has been for a long time, and I anticipate we get a few more of those. Basically, how I see it.
Yeah, there hadn't been a, God, I want to say it was 3% down day on SPY in 7 months.
Yeah.
It's ridiculous. It's ridiculous. Um, let's go there then. End of the year SPY. I've been on the 660 with the whales for a while. Yes or no?
I'll say no.
I'm kind of leaning that way, P. I'm kind of leaning that way too. I'm not.
Yeah.
I mean, just because of
Yeah.
it's the time part. If we don't, well, if we get a decent pullback and it takes till mid-April or mid-October, it's going to be hard to make that back up. Just in what needs to make back up. I'm still for
Yeah.
more broadening, and then that sector, individual sector stuff. So that makes total sense to me. Um, what would be a SPY catastrophic number for you right now? Then 600 or even less than that.
Um, yeah, no, I think it. I don't know if by the end of the year, but I think it lands between 585 and 600.
Okay, I mean that's pretty good
Just
pullback.
based on the
That's pretty good
option
pullback.
setup. Yeah.
Yeah, I mean we did go to 5 in April, so I mean just to bounce those two off of each other, that's an extremely high or low, and kind of a
Yes. Yeah.
super volatile for that on the year just in general. So that's very interesting. Kind of rotate a
Yeah.
little
The
bit. Go ahead.
Oh yeah. I on kind of the triggers for it. I mean, I think tariffs are played out and kind of irrelevant. And one reason for that to me, it's just it's too confusing to be actionable. You know what I mean? Like you have the administration saying that we're getting all of this revenue from tariffs and everything is great. You have random court rulings saying you're going to have to give it all back, and then you still have trade deals coming in. So it's just it's not fresh for the algo anymore to where you bring it up and it does something. So I don't think it's that. I do think it's the rate cut just sort of letting a little air out of the tires, and then resetting. So that's so yeah. So I don't think that this particular pullback is geopolitical in nature.
Yeah,
I think it's just
outside of a China
programmed.
outside of a China deal, P, I'm with you on the tariffs. Ain't really moving things. Um,
Yeah, yeah,
it just really never equate. I mean, both sides. All right, we're getting money. Where's that money at? And I mean, individual consumers aren't like, it's costing me more to buy X, Y, or Z. Um, if the product's not mono, and what I mean by that, if it's like it's single sourced, like you only get it from here. Um, tariffs really can't affect the sector or market. The Jeep
yeah,
example was the best. Jeep got hit real bad with some tariffs just because where they were being built. Um, it just okay, so you go buy a Honda Pilot. It's not like you can't buy a car, and people just have never really been able to put their head around that. Um, that if one brand gets hit with a tariff, okay, well, there's like four other or five other options that are just going to do just fine. So it may
yeah,
limit your options a little bit until you get to that mono product. Um, until you get to something that only comes from here and that's the only one there is. But I mean, if you're buying those, I mean, I don't. You probably deal without it anyways. It's nothing. It's not like you can't live without your Funko doll or something like that. You know what I mean?
right, right. Yeah.
It's kind of, yeah, it's kind of a nothing burger to be honest when it comes to the consumer. And they tried to make it out like the consumer was going to get killed, and that just never really hit the road.
Yeah,
Um,
yeah,
over
with you there.
over extended chart. Someone asked last week, and Unk stepped up and was like, "What are you doing? Don't short shit. We trade shares here." Um, over extended charts, is there some? Sure. We talked about the Duolingo. I think it was last week. PE being there. There's
Yeah.
a few charts like that. Where are you at with playing that side? Is it just off your radar altogether? There's some good opportunities there, or how do you feel about that?
No, so the I've noticed that most of the time when I get into the puts at all, I mean, other than the scalp quick hitters I talk about, where something's down 5%, it's probably going to go down 7.5 or something at open. So we'll put those to the side because that could go either way. Those are kind of 50-50.
Sure.
You be wrong quickly kind of trades. But no, I prefer puts on honestly on stocks that are like the backside trades where it's a bumpy road. And an example of that would be First Solar. I have shares of First Solar. I trade options on it, but when it spikes over 200, I get out of that and I look to trade a put early, kind of early in the morning off that first initial spike to go retest 200, and usually it goes to 196, 197. MSTR, as pivots, it spikes over pivots, it breaks down. It, spikes, breaks down. Happened at 370, happened at 334, tap 317, violent move back to the pivot above. Like, that's where I like puts. I don't look at something like AVGO, had a pretty dramatic move on ER. Did not hold those gains during the day. Finished the day up 9% instead of 17 or some shit. But no, I don't like that. I don't like to trade a stock that's doing well, is up for a reason, just to go mid candle on the 1 hour. That's very dangerous. I don't trade that way because I don't have flow that's gonna give me an indicator there. On AVGO in particular, what happened was it wasn't ask side puts or anything like that. It was just profit taking. Profit taking is the hardest thing to trade puts on, because it's bid side calls. And when calls go bid side, yes, the stock can pull back. It can also just stagnate for a bit. And you have the share buys can move it back up. Maybe there's not enough sellers of shares to really do anything with it. It's a hard way to drive the car. So no, I don't really like puts on the overextended stuff. You have to get some confirmation of some downside. And I have with Duolingo, I have done puts a few times. It was after this. I mean, it was down 30% from its high before I had readable puts on the thing. So no, I stay away from that setup for shorting.
So you're not, for the lack of better terms, ever gonna hype, or you never really high pointed puts. That doesn't really happen for you.
No, I mean, I'll high point a minute chart. You know what I mean? Like,
yeah.
If
but not a weekly.
I just see
not a weekly.
Not a weekly, no.
Okay. Yeah, no, that makes sense. I mean, you know what I'm gonna say? Like, I trade shares, so it's just that it came up. It came up as through put hedges first on shares, which I don't do that even. So that's another kind of do I tell people not to do put hedges, or do I just let them figure it out on their own? But I mean, I guess if you're not there and you're not managing your trades and you like to plant flags and not scale out, it might be good for you.
Well, yeah. So on the put hedges, well, okay. So two things. I could recalibrate my filters to look for the bearish version of what I look for.
Yes.
But there's not as much meat on the bone there. So why would I do that? My first thought on it. With put hedges, if it depends on how much money you have in something, and then how expensive it is to hedge it. And I do think you have to kind of figure that out on your own. If it's a mid cap and I'm in free shares, and I can hedge a $3,000 position for $200, with puts 6 months from now that are in the money. Yeah, to me it's worth it to do that. But you don't spend $700 to hedge $2,000. And that doesn't make any sense. So you have to. It is very much case by case. Always something I'm happy to talk about with people. But something like, well, okay, so MSTR for instance, if I have a day trade of, or well, a short swing or whatever. Like I'm planning to hold it for a little while, at a pivot, hedged upside is what I call it. I might have 5 calls. I may only have 1 weekly put, but for it to go from 334 to 317, that weekly put will end up making more money than the calls lost by a significant margin, because I buy more time on the calls. And then, the next day, yesterday, it goes right back up to the pivot.
So
I
it's not being
clear out. The
able to.
hardest part of it,
Go ahead. Go ahead. Finish it.
yeah.
No, finish it.
Well, the hardest part of it is knowing when to close the put, and I
Yeah.
know when to close the put because I have the pivot down there. So I don't do it if I tried this with AVGO. Where the hell do I sell the put? I have no idea
Gotcha.
because it's just uncharted up here. So that's the only setup I really like the hedge thing, where I know
So
where the pullbacks come.
so just from listening to you, that's why I like to talk to you because you are unfiltered and can explain it well to me. So you're to say it as short as possible, you're skipping a scale out and playing the put side instead, and just holding and hoping the shares. That sounds like what's going on.
Yes. Oh
Yeah.
yeah, yeah,
Instead of
absolutely.
just playing the share side where you would scale out, buy back in, that movement of 4 or 5%, you want to still kind of take profit off of. Yeah.
Yeah, because
Okay. Okay.
I don't like to buy back in on, and it has to be part of a big story, quantum, nuclear, you know, JV semiconductors,
Yeah. Yeah.
where it's not an isolated thing. Open, buy that 1,000 times on the way to 12 to $15. I don't care because we have some
The range
pullbacks
is
and
too good.
levels along the way. Yeah, exactly. So I'm not going to have it go up 20% and lose 15% of that and just sit
Exactly.
there and hold that shit. I mean, why
Exactly.
would you do that? So no, that yeah, it depends on the setup um, and the some things are extremely cheap to hedge and low IV big names, and so that's part of the appeal too. That I can hedge Honeywell for a fraction of what it would cost to hedge the MDBs of the world. So,
For the best example
but
I have, and maybe it'll, eh, I don't know. The best example I have is AG. I mean, we were low, upper fours, low fives, and it went to like the 8 level 2 or 3 times. So let's just say we got like 3 50% trades. And then that second trade, whatever we kept along the way or built in free shares or ended up with when the move happened, that one went 100%. So I got like 250, let's just say 250% out of that trade. I'm just pulling numbers out of my ass. Um,
yeah,
I don't think I could have got that holding a core position the whole time and selling options off of that because my shares would have just been 100%. So I didn't needed to make another. If it was 5 grand, I would have needed to make another $7,500 on options
yeah,
over 6 months. That just doesn't sound like it's. I mean, that might be a bad example because of how the options work on that one. But in general, that happens all the time, and missing that up and down range for me is how I make money.
right. Yeah, no, absolutely.
So,
And
is it what in that situation would it have been possible to match hedging what I made off actually just trading the range of the chart?
it'd be difficult.
Okay, that's what I
The
thought.
levels are too. I mean, the better the levels that you have are, the harder it is. Um, like like hymns, you could make significantly more holding shares the whole time and getting the puts months out, given that pullback that it had. Same with a couple others. Roku, Roku, you could do it, but you have to really tightly manage it, and it's not worth it. You know what I mean? Like it's just where the times that I've sold Roku, and the first time you talked me into it, I was mad about doing it, but it was kind of eye opening for me to just clear out, kind of change how I think about things, and so that so to me, if you think about, you only have so much mental energy to give to trading,
Yes.
regardless of what you're doing, and I'm a fairly busy professional. I'm a college professor, and I'm not a college professor who has like one foot out the door, tenured, who gives a shit, whatever.
You're in the
Like I'm
middle.
actively
You're in the middle.
building curriculums. Like I wrote our textbook for English composition, so I spend a lot of time on my day job. So my mental energy is the first part of the day. I built my schedule to where I can trade here. I read this well, the overnight flow, like, so I'm intensely focused on that. And with share positions, I want to do as little as possible. And so sometimes that means hedging, hedging the free shares. Sometimes it means just getting out and not worrying about that one for a while,
Yeah.
and then
Yes.
it'll set back up. And so that to me determines a lot of what I do. I don't always choose the thing that's going to that has the potential to make the most money. Is, I guess, what I'm
So
saying.
less stress.
I
Less
so
stress.
high maintenance hedge trades require a lot more focus than I'm usually willing to give them.
I mean, I think that's the origin of my levels, P. I mean, really, why I just stick with them is to 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 take care of that maintenance, so to speak. So it is like
Yeah.
less stressful on you. Yeah, no, I'm with you on that. Walking away green is usually better than, I think I said it last week. You get to 20%, taking that versus going back to 16, going to 24, 16, 24, and ending up at 27. That final 7% that it took a month and a half more is just not worth your
Yeah.
mind space. It's not worth your mind space, and it's not just in that trade. It's like you have to reevaluate it. You have to be more critical. It's almost like going from a 101 class to a 102 class because it's a secondary part of the move. And in my experience, I've always found, like cut some, move your stop loss up, come back maybe in a little bit if it doesn't hit it, and remanage that stop loss. And yeah, mental equity I think is probably more important than your equity in your account.
Yeah, absolutely. And that there is so much range in so many things, and we find so many setups. You can check the AI on it if you feel like
Yeah,
it.
let's talk about that.
That a piece of a move, a fraction of a move, and the stuff that we find is more than enough.
Yeah.
I mean, if are you really if you traded Rigetti from $1.50
To say 8.
to 8, are you really upset right
No, I'm
now?
not. I
I mean,
mean, I
yeah,
wouldn't be.
yeah,
um, yeah, no, I think that's not to pick on anybody, but I mean that's the difference between the DG guy and the Ernest guy. They kind of showed up at the same time, and one of
yeah,
them was like, "Oh, look, free $20," and the other one was like, you know, the normal. I'm gonna be quiet. I'm gonna do my own thing, and how much can I get? And those people always get destroyed um, by their own devices.
yeah,
Yeah, it sucks.
yeah,
No, it
totally.
sucks. I'm trying to pull that. What did you think about that? I'm gonna pull it up on screen, but uh, was it like 12? You said it all the time. You would say you can just buy this whole list and wait, and then sell it every week, and you'll do okay. Um, that AI kind of confirmed that. Not that I'm saying people should do that, but those numbers to me were um, off the charts. And I kind of
Yeah.
I analyzed them from my spot, and they clearly show if you take 10 to 20% on every trade, it's real hard to lose in our room.
No, yeah. I mean, I, I was glad. I was glad he did that. I mean, I wasn't. It isn't something that um, I just try to keep focused on the process and sort of just keep getting better and not and sort of be as stoic as I can about
Yeah.
you know the win rate and all that stuff. But yeah, I mean, um, it does confirm it. I mean, it's at some point you see this with with I'll stick with sports analogies, but with athletes sometimes it's like you have to at some point you get the guy who's always like, oh, it's just about the next game, whatever, to acknowledge the accomplishment, right? um yeah, I mean, that was a big game. Yeah, that was a great season. Yes, we're a really great team, and then it's fine to do that, and you can have the discipline to then just um continue the work from that. So I was thrilled with it. I'm excited about it, and I just I want people to use the work, and that's what I always talk about. And it just shows if you do use the work, and manage your own emotions about it, recognize your own weaknesses and bad impulses, and try to just limit those. Limit them. Know you're going to make mistakes. Limit the mistakes. Limit the damage of the mistakes, and you'll do well in here.
Yeah, I think I'm with you. I kind of knew we were okay. Like, I know what we do is good.
Yeah,
But I did not think it was going to be that good. And the another thing that was surprising to me were how like the really shitty ones were the best ones, but they also gave a lot back, and that just kind of
yeah,
it feeds right into my all stocks are shit part and just trade the chart. Um, yeah, it was interesting that they were that there was that few because I mean I would say even if it was 15% that were misses, I would still say hey we're fucking pretty good. But to have a 5% number where it didn't give you anything, and I mean, and then after that, it's 0 to 50. Your medium's 20%. Like, make 10% great again, and I'm giving you an
yeah.
extra 10. So, yeah, I know. I'm gonna. I know him personally, and he kind of he's a computer guy, Oracle guy. And he wants to write an algo for trading, and I think this is part of it, kind of like pulling the data to see what to attack. So, um,
Yeah.
I'm interested in an update maybe in 6 months too to see how it goes, or maybe getting a quarterly report, because it's plug and play for him right now. But um, yeah, super excited. And is there any the question I have for you? Is there anything that it makes you like okay, we need to do this, or let's start doing this after that information?
Well, I think it's something that we've talked about before, and I still haven't really thought of how to just include this within the channel. I just don't like to. It's a big decision to have a
Yeah,
new channel in our Discord, right? But it's the back burner, the one that's it's this is likely gonna set up again. You really need to make sure that you keep this one on your mind, and then it takes back off from a level. It's something that it didn't make the hot list. It's probably not going to make the hot list, but it just a reliable setup is really shaping up here. And I mean, to me, people find those stocks they like that kind of piecemeal right now. Figuring out a way to teach those setups and keep them in the same place is something I'd like to try to figure out at some point.
no, I like that, and names always come to mind. AG Redfin, yada yada yada, you come to
Yeah,
mind
yeah,
on things like that we find, and um, I really think the kicker on that is you agreeing to just having a really high standard on those.
yeah.
Um,
Oh, yeah, I agree.
other than that, I told myself this morning, um, get this session down to 30 and 40 or 45 minutes, because we give this shit for free, and we'd rather spend more time working. We're right at the
Yeah.
45, so I'm gonna flip this over to the boring stuff if you don't have anything else you wanna.
Yeah. I'm just gonna do a quick run through there, because not a lot has really changed here. Get off my minute my minute chart. Okay. So yeah, like something like copper is I'm still thinking mid candle. Could consolidate here for a while. That this hasn't broken all the way down to 4 is it's kind of the most significant element. So I would say you kind of scale in slowly and stick to the most reliable ones. And our room knows the names on that.
Yeah,
Um,
they're divergent in those charts right now too. They didn't pull back with
yeah,
that, so
yeah,
I like it.
yeah. So silver and gold. What I mean, I don't know. What can I say? Um, Here's the move we said was going to happen, kind of deal. I would not even call these overextended. I mean, you're in the midst of a move up that has a reason behind it, and as long as there's belief in that reason, they're going to continue to move up. So um, entries get tricky. Gold, um, well on its way to the better year than Bitcoin. Even if Bitcoin hits my number of 132, gold's still having a better year than Bitcoin. So I mean, it's just enjoying what I have left in that stuff. I don't really have. I don't have an entry. I mean, I think you look for the distressed miner who has bad news, and then you'll get an entry maybe. But other than that, it's tough.
It was real. It was fun. It was real fun.
Yeah. And
Excellent.
let me go to
Maybe a little left on the silver plays, just because it's more usable than gold. That's pretty much it. But
Yeah.
I mean, yeah, you guys seen it play out. It's fucking
Yep.
September. We were talking Christmas. Christmas is when P said 340 on gold, and
Yeah.
I mean, I laughed and said, "Hold on, say it again so I can write it down."
Yeah. Yeah. Yeah.
So yeah. I mean, pay attention to the next one when he talks like that. He doesn't miss.
Thank you. Um, Oil. Yeah, I'm kind of unbothered by so pulled back 2.5%. The stocks didn't. I mean, so this is just going to consolidate down here for a bit, and we'll find some range, and I do think when you see the move in oil, it is probably going to push between 80 and 85. I don't think we're getting $100 oil without a significant reason, but plenty of swing setups in that sector. Natural gas, same thing I always say, 5 to 7. That's the real price of it to me. But there's a lot still has to unwind for it to make that move.
Will you weekly that for me real quick? I just want to get the look on the screen.
Yeah.
I think it's important on that one.
Yeah.
You're still higher low range. Okay. You don't see this above 5. You 3 to 5 stuck for a while, right? Like the winter season's not going to change.
The follow through from 5 is they're gonna have to just take the training wheels off or whatever, however you want to say it. Like there's something that is suppressing this price related to Russia and Ukraine, which has just been stagnant for years.
Mm-hmm.
So when that sort of settles out and more authentic market kind of takes shape, then you get the 5 to 7. But 3 to 5 is good enough, though.
You're 100%.
Yep. All right. So then China, real quick. Kind of like the weekly here. Still looking to grind up on this.
32.
Yeah, I was gonna say 30 to 32 is where I think that's headed, and there's some good names there. It's one where I just sort of we pick and choose individual names and have done pretty well doing that.
When I first started trading, I always had the day trading, not like trading, just like day trading. I always had the don't really trust China as far as you can throw it because they could all get delisted tomorrow.
Yeah.
That ain't a thing. That ain't a fucking thing. It would take a lot for that. And I do think China not having a deal, if they do get a deal with us, even if it doesn't affect the individual sectors, we are going to have a good 2 weeks in the China market. So I would definitely keep a basket of those around, and then trade that tradable range currently when they do get set up, which you kind of identify. You're good at filtering the China bullshit.
Yeah, no, I'm looking forward to it, and it's funny with China. It's always seems to be the very best
or the worst
in terms of companies, and the very worst.
Yep.
Those are the two that it's a little harder to trade a Chinese mid cap than in some sectors.
You're not bagged on Tiger in this room. Let me just say that.
Yeah, right. All right, so then. Bitcoin, as you reminded me, I guess we're in our second Bitcoin bet, so I'm 0 for 1. But I mean, I'm sticking with it. You know, we're closer to year end, but I'm still sticking to my 132 number.
112 is a
And
problem right now, though, P.
oh sure, yeah, yeah, it
112
is.
is a
And
problem.
I just I've made a lot of money off that problem. That's what MSTR keeps rejecting and having a bad couple hours, and then it comes back and sets up for the next
Well,
day. So
the update question was that 107 flush it for you? Was that how you're seeing that?
yes,
Okay,
if I'm right, it has to be.
I agreed.
I don't think you can. If you get, it's pretty dangerous. You get down there again because it's gonna just wick down to maybe even pushing 100. So,
Yes.
um, so yeah, no, we see it the same. I'm just gonna stick to it not doing that.
Which
It's
way
easy
did
to stick to a bet like this where I'm not gonna lose a lot of money if I'm wrong. So I'm
if point five happens on the cut, what happens to Bitcoin right then and there? Up or down?
pop and fade.
Okay. Okay.
I just think the pop will be more than people think.
Okay.
Yeah.
No, that makes sense. I see where your head's at.
I mean, yeah. So that 132. I mean, I'm not then gonna say
It's not turned into support. I get you. I get you.
exactly
I
right.
get you.
Yeah.
I
Yeah.
get you. No, that was the same with my 120. 120 plus the gas fee, so 123. That's what that was.
Yeah.
Was just the I think we get overextended here. So, um, yeah, I'm kind of seeing it the same way as you, except for I think the longer we're here and that 112 is a problem, we have to flush just to create some liquidity. Um, but
Yeah.
I'm with you. If this holds till rates, I could be in trouble. My number could be in trouble.
It's fun. It's fun to follow.
Yeah,
Um,
yeah, yeah.
and it's not very tradable for you. You have to wait for the flush.
I
Um,
still haven't bought a coin, P. Still haven't. I'm sorry. I still don't got a Coinbase account. I don't got no
yeah.
Ripple.
Yeah.
I mean, it's just not. I'm sorry. It's just I'm an old man. Get off my lawn when it comes to that. I will say though, it does point. I mean, I'm pretty honest about it, and it does point to how important some basic TA, because it's nothing crazy. I'm not looking at like volume or anything, but just some basic TA and the psychology of stocks, because that's really what I
Yeah.
lean on when it comes to Bitcoin. It's all psychological. And I'm sorry, I'm the professor when it comes to psychology. If I'm dealing with 20-year-olds, I'm fucking PhD graduate if I'm dealing with 20-year-olds, and that's just kind of
Yes.
how I always felt about Bitcoin. So, um,
Well, I only I did buy quite a lot of Bitcoin. I I DCA'd up to 60,000 from when we first started getting into it, and but I didn't like buying it over 60,000, and but I kept most of what I had back then, and so it's like I still believe in it, but here's the problem to me. You 10x Bitcoin because I don't use leverage on it. So you 10x from here and you go to $1 million a coin. Um, that's not as plausible to me as some 10x setups that I think we have in stocks right now. That the stuff that 5 years from now you will probably will probably 10x. Um, Open very well could do that. Hood did that. Um, Carvana, like we find things like that, and so it's not the mental capital part, the risk reward, like to continue buying Bitcoin every day for me doesn't have the same appeal as it did when it was 20, 30, 40, 50, 60,000. So I'm
sure.
you know I'm done doing that. But yeah, I do still think there's a future in it. It's just a more boring future as funds have gotten involved, and you know BlackRock owns a bunch of coins and shit like that. So yeah, the euphoria of it maybe is still in. I don't even. I think the meme coins are kind of played out. Whatever the next thing is, whatever the next JPEG monkey is, yeah, there will be some kind of move like that within crypto, but um, our process is not applicable to it very well, so I don't really mess with it that much.
Yeah, no, I mean, definitely money to be made there. Timing's everything. Don't let greed fuck up your timing over
Yeah.
there. 10
all right,
year,
real,
10 year, 10 year,
um,
10 year. No, 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 no,
oh
no,
yeah,
no,
yeah, oh
no,
yeah.
no, 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 no. Thank you, sir. Not today. Not this week. Waiting for this one.
You're
Um, it
you
kind
used
of
to
got.
not really you used to brush off the 10-year a little bit. You're into
Yeah,
it now.
yeah. Well, if it's gonna move like that, that's what we said we didn't want, but where we wanted. We didn't want that kind of move, but we wanted it to go there. So we got like half and half. So very interested in this conversation this week. It didn't. I was surprised how the market reacted with that kind of move. It was. I
Yeah,
was.
well, what would you expect happen
I
with
just
the 10 year
expected it to be
drop
a little
10%?
flat. I didn't expect Smalls to run like that. I really didn't expect there to be that much activity Friday. I thought we were gonna have a bad Friday.
Yeah, well, it so the 10-year dropping like that with Smalls in particular, it kind of gives them some room to breathe. Is how I kind of see it, that they it's a all gas no brakes for some of that stuff, and the it's risky for the market for this to just plummet. So
Yes,
you kind
yes.
of would rather you want to go mid candle from that move down, over not over even a day, but 3 or 4 days from now, it would probably be better for the market if this were
15.
4.1 something.
Yeah, yeah.
Um, but yeah, I mean that's what to watch here. You get a follow through down on this, um, it's going to get a little chaotic in the market. So that's what to watch.
Perfect. Is that slow? One
And
question for you: is that slower moving? That's not like real time, or is that like real time? Do you think, like the way it affects the market? You know what I mean by that? Like,
oh,
as it happens, is it instantly into the
yeah,
market,
I
or
mean
is it?
stocks react as it happens for
Okay,
sure.
okay, okay.
And then it also is a little bit forward looking too.
Perfect.
So yeah,
Some spy
so
action.
boring is better.
Oh, 100%.
Yeah. Um, all right. So yeah. So I do actually. I have something this week. So
Wow.
I've got that 585 March put is going a little bit more ask side. So they're buying it some. Nothing major, but complement is now exists, and it is 600 February. So that's new to work its way into the high open interest. So that's the pairing to me. Um, Pullback would be more imminent if you had a third one that was a little closer, and November 6/30 or something like
35.
that.
Yeah,
But
yeah, yeah, yeah.
I don't have that. But, yeah, they're this is their we're gonna make money if we're wrong setup. So
Still no top though,
they're
huh?
start they're starting
No,
to hedge more.
no
Yeah, still
top.
no top.
That is, we've done this for a long time, and I've never went 2.5, 3 months with no top through these conversations.
Yeah,
That's just interesting. Um, for me, it just says they're positioned well.
yeah, that's what I think it is.
I'll pull up some TA on Spy. I had not necessarily related, but just wanted. Did you seen that cable get cut stuff again? Right, the internet over there.
Yeah,
Red Sea. Okay.
yeah,
Nothing burger for us. There was another one too.
yeah. Kind of a nothing burger. I don't have a flow response to it. So
Yeah, yeah. Well, just where geopolitical events are going lately, right? Like kind of
yeah,
nothing burger. Um, the Friday pullback kind of put us back in the range. We got overextended on that 152. I mean, we keep getting that higher high, that work up. If we go with what I said a few weeks ago, if you look at the weekly, you have 3 or 4 candles. We have 5 now. There's 4, 5 in the last one. You're gonna get that red candle pullback. I just think that's next week. So I'm kind of hesitant this week to say we don't or to say we stay in the box because I I want it to be next week when the pullback, but you don't always get what you want. So, um, man, 50. I just don't. I just see 50 as resistance currently. Um,
Yeah.
and then that 35 still stands out. So I mean that it's $15, but that 35 to 50, I think is just where we're gonna live until the rates. It's about 10 more days.
Yeah, and it's hard to trade these pullbacks because all right. So just as an example, let me run these numbers for you about what a trade like this looks like. So you think SPY is going to pull back, and you want to buy puts to support that thesis, and it's like it's going to pull back this week. Um, so the two ways that these guys do it, first, the more popular way is one DTE, maybe two, of a SPY put. They probably only buy one, but whatever. So you have to spend about $200 or $250 to have a reasonable chance to make money, and then you get that pre-market flush, and you do your options profit calculator, and you're going to open it at $350. You're going to make $100. Well, a lot of times pre-market it starts to recover a bit, whatever, and so then up 75. Well, and then do you close it out right at open? Because you can watch 25 of that disappear right away on the first minute candle.
Yep.
And it's like, well, I'm going to hold this. I'm going to hold this. And then all of a sudden it's red. And then it flushes, and then, you double your money. Or it moves up 0.3% in the pre-market, and that contract's worth $75. 250 down to 75. That's just not a way to live, I mean,
Yeah.
it's really tough to do. The other way to do it is to spend thousands of dollars on a swing, which you can watch bleed out, for 3 days before it goes green for you. So, yeah, very tricky to do that with SPY. I just I don't see it. I mean, you want to trade SPY, just look at what Goose is doing to me. I mean, I don't even follow it. I have QQQ, and it sort of matches up to I see what he's seeing, and we go back and forth during the day. I'm not trading that much, but yeah, if you want it, like let the day set up and trade that instead of trying to swing overnight. It's a disaster.
Yeah, just show you how hard it is or not how hard it is, but how complex it is. I see it coming. And you can go search the
Yeah.
room this week. I said, where's Goose? Goose is incoming. 5-6 hours later, here comes Goose doing the normal Goose stuff. So,
Yeah.
I mean, as soon as it's just you see it. You see a little bit of that short term oversold with a lot of volatility and range and attack it. So, yeah, not for everybody.
Yeah.
Not for me, not for everybody. Um, yeah, we went an hour, P. You got anything else before we go?
No, we're good. We can next one.
Perfect. All right, people, like and subscribe. Link somewhere.